Good evening, EGA Tribe. Welcome back to the Everyday Growth Advisors webinar series. I'm just going to be doing a couple of these videos every day to wrap up the post-market action and kind of give you guys a breakdown of what I see for tomorrow, some potential opportunities, and I hope that you guys are having a great day, winding down your day, and maybe for those who are in Asia, starting off your day right. Let's get into the market action for today, specifically what moved and what did not move. As we can see on the heat map today for the S&P 500, energy was another bright spot today, as well as financials. They continue to dominate the S&P 500's gains and returns. I've been highlighting this for a couple of weeks now that the market has been supported by these two sectors strongly. Another key sector that has been holding pretty well is big tech, actually. Even though today we're down about 1%, just on most of the big names, we are seeing that continued support in the S&P 500 is actually being driven by these names. Now, the consumer discretionary and consumer defensive sector are trading pretty flat, and we expect to see some exuberant spots within these sectors within the next few weeks as a possible sector rotation. We'll be updating you more when we find more information like that. Let's get into the technical breakdown for the S&P 500. I'll be doing a couple of technical breakdowns for you guys. Remember, guys, we start with the top-down analysis, and we go from there. We have been in a technical uptrend. You can see that this trend has been extremely strong to the upside here. We have been having consecutive weeks of higher highs, and the S&P 500 came back down to almost the 20 EMA sometime last week, but then got bought up very strongly, showing you that buyers and demand appetite is still prevalent in this market. And through this time, we'll see if we can actually get a possible correction here to the 20 SMA in the next few weeks. I think this might line up with June, which is sometime when usually we have a sideways correction or a little bit of a sideways movement, which is if you watch my webinar from yesterday, you'll see we were talking about that and how I view the S&P 500 possibly going sideways here for a while. Okay, on the dip right here, this looks extremely bullish right now. As we got the dip that we wanted, this was about, let's see, about 5% from the highs on this dip on the S&P 500, which is a nominal correction on the uptrend. We may possibly go up to the all-time highs to test it again before coming back down for a deeper correction. There is a possibility there. Now, the S&P 500 here, you can see that the 20 EMA right here is actually upward sloping and about to cross over the 40 EMA. These are the 20 and 40 EMAs right here. The pink is the 20, the blue is the 40 EMA. We're looking at price action perhaps in the short term correcting to the upside. Now I'm looking at the 4-hour chart here. So we're looking at a possible medium term to short term correction to the upside. Bulls will have successfully recaptured the 4120, which is the key level we've been talking about for a while. The 4120 level is a key level of support for the S&P 500, as you can see right there. And if we continue to hold this level of support and continue to make higher highs, we may see the S&P 500 go into the all-time high territory again, supported mainly by energy and financials. But what is lacking to really push this rally forward is tech. And so that's why the next thing we want to discuss is the QQQ here, or the the NASDAQ ETF. And so here you can see on the weekly chart here, we always do a top-down analysis once again, and you can see the overall trend is still intact. We're still in an uptrend, and looking at this, we came down for a very nice bounce last week, and we got bought up pretty massively as well, right? We got bought up. There was a pretty long wick on this candlestick right here. If you can see it, let me try to get rid of these little things. Yeah. You can see a pretty long wick on this candle right here, and this week is still pretty trading flat. Remember that this week is a OPEX week, okay? So a lot of options expire this week. Financial instruments have options, and most financial instrument options expire this week. It's a rather volatile week, more volatile than usual. Therefore, these are the two possible bounce levels that we were looking at on the NASDAQ ETF, or the NASDAQ to talk about. So by the way, this is a long-term trend line that we are looking at back from September and October last year. This trend line has been holding steady. We haven't gone down to fully test that trend line yet. So if you look on the 4-hour chart here, you'll see, and I like to use the 4-hour because it has more information than the daily chart. You can see that we came pretty close to test the zone, but we didn't really make it there. This may be retested in the future as we continue. You can see that tech is still remaining bearish here, as discount rates still get adjusted. I've talked about how the market is pricing in a quicker interest rate hike than usual, and what that will do is it devalues tech stocks because of the fact that the risk-free rate of assets start to go up. That kind of erodes away the value of tech stocks. So in the short term, we may see kind of a bearish consolidation here, but if we don't break this level, the 316 to 315 level on the QQQ, we will still maintain this technical uptrend here. If we get a break, maybe a retest of this level and then another rally to the upside, this is more than likely going to still be a solid uptrend. Okay, so what is the main problem here, or what is the major disconnect? Well, the major disconnect is the S&P 500 is bullish and the Qs are somewhat in a technical bearish stance, right? So something that you need to know is that technology makes up a big part of the S&P 500. So therefore, it's something to the tune of 30% of the S&P 500. As you can see from the heat map here, right? The technology sector is the biggest sector in the S&P 500, right? That includes your semiconductors, your infrastructure, tech infrastructure, your software, consumer electronics, other kinds of software, your CRM, your Cisco, your applied materials. Everything is all part of technology. Okay, and so if we don't get a bullish reversal in technology, it is unlikely that S&P 500 will peak up to all-time highs. We need cadence between these two indexes for us to reach there. Okay, so that's what I'm looking at right now. All right, here are some other key things that I'm looking at. That's your technical breakdown for SPY and S&P 500 done. The Dow Jones is kind of doing its own thing. We'll get into the Dow Jones more tomorrow. I want to keep these videos as short as possible. Other things that I want to cover really quickly. Gold, broken out of a technical downtrend. I've been calling this one out for about 2 weeks now and alerting you guys on this opportunity. We finally got the rally that we want, and I mentioned that this 174 level is the level that bulls have to capture in order for us to see a continued upside. I would like to enter in a consolidation here. Sometime if we can find support at the 173 and 174 level on this next wave down, which might coincide with the next wave down in the S&P 500, we can enter gold long to the 190s. My recommendation is a leap or a long-term expiry contract on gold, okay, because inflation is going to continue to peak higher, and you want to take advantage of that by putting some of your capital into gold. I'm not saying a big percentage. Usually we use gold as a hedging proxy, and we usually assign about a 5% risk to it at max. The VIX also is another thing that we want to cover here, and I will be covering these on a daily basis now for you guys so that you can actually have a look at what's going on in the markets and what's moving or what's about to move. So the VIX is now kind of sold off from the highs of the $29 high peak that we went through last week. And we are seeing a continued correction downward to the $16 level. If we break the $16 level, then we will see majority of investors who were buying out the money options who have now exited those positions. Remember what the VIX is. The VIX measures the amount of out the money option contracts being bought by traders on either side, both calls and puts. Okay. So we're seeing the VIX come down a little bit. This should be grounds for the market or jitters to kind of calm down a little bit. Next, TLT. I put this one as an alert on our Instagram as the weekly watch list. This one continues to exhibit bearish behavior, and I think going short on TLT here is still a very good option. If you can get it on the rally, it will be even better. But I don't think we will get a full rally on this one. Looking at the 4-hour chart here, we're still in a bear flag here. You can see if we get into the 15-minute chart, you'll see that this bear flag, the bigger daily bear flag has its own bear flag right here, right? This is another bear flag. And so, a break below this bear flag will send TLT down further into the demand zone that's right below us. Taking some puts into this 61.8 Fibonacci extension right here at the 132 level makes complete sense, maybe for about, I would say at least 3 to 6 months out. Another ticker that we're watching, SE, for earnings this week. This company reports earnings, I believe, today. I think it might be pre-market, so we might have missed the opportunity to play this one, but we saw a lot of out-the-money bullish bets being played on this one, and we'll see how this turns out, because I think this was a great play to the upside. Risk-reward ratio was there. We might see a gap up on this one. ROKU with the technical downtrend, but approaching a key trend line. You want to keep your eyes on this one. Tomorrow we have our eyes on a $340 target. If there's a violent breakout, this is if NASDAQ cooperates. So keep your eyes on this one. Technical breakout possible from the downside extension. As long as we don't break below this level right here, the 302.80, we should be fine and holding this level and consolidating into this breakout here. Okay. Next up is Citibank. This one was also a part of our daily watch list on the Discord channel. Gone into price discovery here, break into an all-time high situation. We might see an extension. We are almost hitting the first target already at 77.90. The extension could go all the way to the $80 level. So taking this long on a bearish retracement would be nice. So yeah, keep your eyes out on Citibank for continuing to make higher highs. If S&P 500 continues to go higher here, this is one to watch for sure. Alibaba here, kind of found support right at the 204 level and exhibiting some bullish behavior. We'll see if this one can continue tomorrow. It kind of bought up and sold off today very quickly. But we do see long-term opportunities in Baba. This stock is undervalued for the long term, and I like this stock for the long term. It has been consolidating in a technical downtrend for a heck of a long time. As you can see over here, we're looking at this to keep consolidating and then break out violently up into the $300 levels into the future. This is a long swing trade. Facebook here, broken out of the technical downtrend, looking for targets up in the 322 level. This may be a good day trade to take tomorrow. Just keeping you guys updated and giving you guys some opportunities here for you guys to watch out. So Facebook looking nice here, broken out of this, consolidated right at the 0 Fibonacci level, and tried to go down for the 23.6 but never got there. The extension to 23.6 will be imminent, and then extension to the 38.2, 319. Finally, before reaching out to this previous resistance here at 322 tomorrow or the day after, as long as tech cooperates, as I said once again. NVDA as well in a falling megaphone pattern, but I do think that this looks more bullish than bearish. It looks like we've already bottomed out here. We made a higher low from where we were. If we can break above this level, we might see 600 very quickly here. Looking at the the Fibonacci extension, if we were to take this extension from this previous wave down here, we're looking at upside target of at least a 585 very quickly here. This could be a very quick buy up if we break out and start moving higher once again. That is your technical update for today. I hope you guys enjoyed this video. If you do, remember to leave a thumbs up and smash the like button. I'll be trying to do more of these videos for you guys. This is one of the reasons why I stopped doing the live streams. I feel like this way I can concentrate more on providing you guys with better content. If you like this new content style, please drop a comment and tell us how you feel. We love putting out good content for you guys, and we will continue to do so. And yeah, I love you guys, so take care, and I'll see you guys tomorrow for another technical update. Peace.